See if this is gonna go live. All right, hey everybody, it's Chris with Life 180, and thanks for being here today. I was having some conversations earlier in the day with a bunch of people on the phone, and ultimately what it came down to was rather than recording a video, I wanted to just go live and have a conversation, because honestly, I enjoy going live a lot more. Don't have to worry about the editing, and I could just kind of like let it free flow, engage, ask questions, have people ask questions, and I can respond to the questions. And to me, it's a lot of fun. So the title of this is Index Universal Life, or does Index Universal Life align with your values? Now, here's the thing, and here's why I came up with that topic. Is I was talking to somebody earlier, and we were talking about the fact that when you invest in 401ks, when you invest in IRAs or any kind of typical investment, it's ultimately you are investing for an accumulation model. You are investing in something that you ultimately don't control. One of the things that I know is inside of 401ks, inside of IRAs, 403bs, 457s, and any kind of qualified account. I know that a lot of people out there, like Doug Andrew, for instance, he uses his marketing around the fact that an IUL is a rich man's Roth. And so when you look at the problem that you're trying to solve, in avoiding utilizing qualified accounts, and I know a Roth isn't a qualified account, but I know a lot of people, there's a lot of conversations going on from reallocating money by agents, from reallocating money out of qualified accounts into Index Universal Life. And the conversation there is, well, think about it this way. If you're a conservative person, I think like most of the conservative people in the world believe that we're in an environment, the government's spending too much money, it's being irresponsible with its responsibilities to the nation and what they're supposed to be doing. It is on top of spending too much money, we know that we're going to have to be increasing taxes. We know that we're going to have to increase interest rates. We know that ultimately we've been living in a bubble for a period of time, and we're either going to have inflation and we're going to have challenges, or we're going to have to rein in inflation and we're going to have challenges. One way or the other, you can't go through this bubble without having a challenge of some capacity, right? And so if that's the case, I'm a big believer right now that IULs, and it's no secret, but I'm a big believer that if you believe all that to be true, we're in a scenario where IULs are damned if they do and damned if they don't, right? Like, so they're going to struggle if interest rates go up, and they're going to struggle if interest rates come down. I'll talk about that a little bit later. But for the purpose of the values conversation, it's astounding to me. I actually just got done recording a video that's going to come out in the next couple days, talking about how much money in this country is actually residing inside of qualified accounts. It's astounding how much money is sitting inside of qualified accounts. And so think about it this way. There's over $25 trillion of Americans' money sitting inside of qualified accounts. And if that's the case, think about it this way. The government has the ability to just confiscate that money. It's happened before, not inside of 401ks, but in other investment vehicles that the government had control of. And like in World War II, when they just access that money to pay for tanks, to pay for building, equipment for the war, machines for the war. But the bottom line is, even above and beyond that, let's just say they don't go crazy and take all the money. They have the ability to tax wealth away. I mean, if there's $26 trillion sitting inside of an account right now, imagine that the government ultimately controls and has the ability to tax. Like, let's say they just increase taxes 20%. They have the ability to reduce the wealth of America, of everyday, Main Street America, by $5 trillion. 20% of that is $5 trillion, by an extra $5 trillion, right? Like, that's pretty crazy when you break it down like that. So think about it this way. And the reason is Index Universal Life in alignment with your values? Well, think about it this way. Most people are sold on the fact that it is, because they're sold on the idea that, okay, here's the deal. Get your money out of the 401k, because get your money out of the qualified account, because what's going to happen is, if you're a conservative person, and I know most people buy into this concept, if you believe that that the government is spending too much money, the taxes are going to go up, that inflation we're going to have issues with, whatever, blah, 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 blah. Like all the challenges that people have with 401ks. I got plenty of videos on that. I'm not going to get into it a lot in this video. If you have challenges with that, then you say, okay, reallocate that money. Why would you want to put money into an account where you're deferring taxes in a lower tax rate environment and putting them in, and then so take them out of that account and put it into an account where you pay your taxes now, it grows tax deferred, you get access tax free through policy loans, all these different things. And it sounds like a good concept, right? Well, here's the problem. It's really not, because when you look at the moving parts inside of a 401k and then you look at the moving parts inside of an IUL, the bottom line is all you're doing is you're transitioning away from the government for an insurance company. Now, I'll grant you that I will trust the insurance company more than I'll trust the government. No doubt about that. I will do that 100% of the time. But the bottom line is you're still entrusting somebody with that money, because you're not taking that money from a 401k and putting it into a vehicle that has guarantees. One of the biggest problems I'm having right now is I'm going through and I'm reading some books about compounding and the wonders that compounding is, and how Index Universal Life helps you take advantage of compounding and all that stuff. It's like so inaccurate with how it comes into compounding, or how compounding comes into play inside of Index Universal Life. They try to say when you have a negative year that you're capped at zero. Well, yeah, you're protected at a zero floor, but you also have insurance costs and fees and all that stuff in it. So you are going to dip into the negative. That interrupts compounding, because those fees get taken out of the premium, of the cash value and everything that you have in there, right? Like, so it's not pure uninterrupted compounding. When it gets illustrated, excuse me, when the policies are getting illustrated at 6.4% and they're running calculators assuming 6.4%, you're not getting an internal rate of return of 6.4% if that's the assumption you're going on. You have to back out all the fees and expenses. And so it's not being sold 100% purely. And so that's just kind of like a side note that I got to say about that. But going back to the topic here, when it comes to your values, if you look at the, comparing 401k to an IUL, yeah, I would say an IUL is better because you have the tax benefit, but there are also a lot of moving parts inside of an IUL. If you follow me, you know that I'm a big believer in investing for cash flow. My biggest issue with this concept of transitioning out of a qualified account and going into an IUL is you haven't really solved the problem, because economically speaking, my biggest problem with the 401k isn't just the taxes. It's the fact that you don't control the results on the other end of it, right? Like, we all have something that we want to create out of our life, right? A specific result that we're trying to achieve, right? I hope that you do, that you have something that you're really trying to intentionally live for and create by design. Because if you don't, well, you're in a lot of trouble. So I would say that if you don't, make sure you get on that and you are really intentional about what you're trying to build. And I think when you understand what you're trying to go to, then you can make a plan to get there. And so my problem with 401ks is that the volatility is all over the map, right? And you could get 20 years down the road, if you're planning on a 30-year time horizon, you get 20 years down the road and it could go completely sideways, and you may not hit your objectives. You may not achieve the desired result, right? Like if that's the case, then the next 10 years, you're in a lot of trouble. It's going to be hard to make up for that missed opportunity, right? Like your lifestyle is likely going to have to take a step backwards. Well, guess what? With Index Universal Life, anybody that knows anything about Index Universal Life knows that the surrender charges are super high at the beginning, and knows that you're kind of stuck in them. And so once you decide to spend money and save inside of an Index Universal Life policy, that money is stuck, right? Like, it's stuck. Now, maybe it'll break even year 10, but that said, you're into this for a 10-year commitment, right? And let's say you have a 30-year time horizon. That's a third of your time horizon. So from a compounding perspective, the opportunity cost of getting that wrong is massive, right? So at the end of the day, you're not really solving the problem, because you have no control. You're still investing for accumulation. You're still replacing one accumulation vehicle for another accumulation vehicle. And one of the reasons I like whole life insurance instead of Index Universal Life is because, yes, whole life will accumulate money, but it's that mindset: what's the upside? What's the downside? Can I live with the downside? Well, on the downside, a whole life insurance policy is going to give you far better guarantees, and it can be, because of the guarantees, it's a great banking alternative. Index universal life, the guarantees, anybody that tells you that your money is guaranteed inside of an index universal life, that is a flat out lie. Your money is not guaranteed inside of an index universal life, and I know people are out there selling it as such, and if you are one of those people, I implore you to stop. And if you are a person who's looking to buy an index universal life, I would say, if anybody says that to you, you just turn and run the other way. Don't even give them the opportunity to try to correct themselves, because that tells you enough. Because if you let them try to dig out of it, they'll probably try their best and sell you on something. So, excuse me, I had to take a drink. So I don't even remember where I was going now. Like my mind is all over the map here. So here's the bottom line, is that with index universal life, and you look at this, and if you think about your values, what I want to encourage you to do is think about this. If you are somebody who believes in these things and you're conservative, like let's say politically conservatively leaning, right? And you believe all the challenges in the government, all the things that are going on in the economy, and that we're in for a bit of an economic storm to come, which I truly believe, then I would caution you to say that index universal life is not in alignment with your values, and here's why. So all the reasons you got rid of a 401k, now you just transition from the government over to the insurance company. Well, one of the things I learned back in the day is they created index universal life as a way to offset the risk from the insurance company to you, the policyholder, right? And so what does that mean? That means now, instead of the government being in control of increasing taxes and doing all these things that will hurt your account value, now the insurance company is the person, is the company, is the institution, I guess, that now has the ability to do the same thing. Instead of increasing taxes, because you've already paid your taxes, they have their obligation, not to pay their debt like the government has. Their obligation is to pay the debt to the guarantees of the policyholders of whole life policies, of annuities, of other contracts that they have guaranteed products with, right? And so from that perspective, when the general account struggles, they have to find revenue elsewhere. So when I say, now I'm gonna get to the damned if you do, damned if you don't kind of conversation for IULs, just because IULs have worked over the past 10 years in one of the greatest booms of all time, and I would argue they didn't work as well as people said they would, and I could do that very cleanly, it doesn't mean they're gonna keep working moving forward. The environment that we're living in moving forward is gonna be completely different than what it was before, right? So what I wanna encourage you to think about is the fact that, look at where we're going right now. You either believe two things. You think we're gonna stay in a low interest rate environment and we're not gonna raise taxes, right? Like I think there's no in between on this. We're either gonna stay where we are, and if we do that, what happens? Let's look at the variables. Well, then we look at index universal life. They're gonna have to reduce cap rates, because when interest rates stay low, the fixed markets struggle. That's where insurance companies get their returns in the general account, right? And so if the fixed markets struggle, the insurance company is gonna struggle to get those returns, and they're gonna have to reduce cap rates to recapture revenue to cover the guarantees for the other products. There's a reason most cap rates are allowed to be reduced to 3% for an insurance company. It's to back them up. It's their, in case of emergency, break open glass kind of scenario, right? And I'm not saying they're gonna drop them all the way to 3%, but in most of these contracts that have 10 to 12 cap rates right now, if those drop between 6 and 8, everybody's policy in the world is gonna blow up, I promise you. It's disgusting. And so, and it's not gonna take a lot for it to get there, right? It's just not. So that's that. Now, if interest rates go up, right, and taxes go up, let's just take one at a time. If interest rates go up, what happens? Well, look at what happens right now when every time they raise interest rates by about 1/4%. The nature of increasing interest rates in Keynesian economic theory is the fact that they are taking money out of circulation. They reduce interest rates to pump money into circulation. They increase interest rates to take money out of circulation. And so if that's the case, think about it this way. If they increase interest rates, they're taking money out of circulation, that's gonna hurt the stock market performance, and that's gonna drive down, that's gonna allow them to not have to reduce cap rates, but it's gonna drive down performance in the stock markets, right? Like, so in the index funds. And so what's gonna happen is, even though the cap rates are gonna be high, performance is gonna be low because interest rates are going up, because everything we're living in is an inflated environment, right? And I think most people align with that. And so I think this will make sense to you, right? So the nature, even though interest rates go up, the cap rates are going to go down. And so since the IULs are connected to the markets from that perspective, even though your money's not directly invested in the markets, it's connected to the performance of the markets, and you're going to get a low return in there, right? Like that just is what it is. Now let's talk about taxes. If taxes go up, even though, we don't know what's going to happen, I think taxes have nowhere to go but up. What's going to happen is that the markets are going to struggle as well. And so we could even have a situation where interest rates stay low and taxes go up. And I think the markets are still going to struggle because they're going to try to recapture revenue that way, and the markets will come down. And so I think that's really important to understand. Now, let's look at the other side of this for a whole life policy. If interest rates go up, what happens? Well, the markets may struggle, but when interest rates go up, the general account funds do well because the fixed market will do better as interest rates go up. Treasury notes go up, corporate bond rates go up, everything goes up. Debt costs more money, and they can lever these debt vehicles to create better guaranteed returns inside of the fund, and therefore it gives whole life insurance an opportunity to actually increase the dividend rate, right? Now, if dividend rates go down, or if interest rates stay low, I should say, then what's going to happen is dividend rates inside of a whole life policy can go down, similar to the way cap rates would go down. But the difference is whole life insurance is guaranteed to be 4%, period. And so once again, what's the upside? What's the downside? Can I live with the downside? And my problem is what's really driving me crazy is I see so many conservative people that are buying into this philosophy and selling this philosophy of IULs when it really doesn't align with what they say their values are. It doesn't solve the problem they say they're trying to solve, because if you look at the environment and if everything they say is going to happens, the policies are screwed. They're going to blow up, and there's no way around it. And so I really implore people to think about it that way, because if interest rates go up, IULs are struggling. If interest rates slow down or stay low, they're struggling. If interest rates stay low and taxes go up, they're really struggling, right? Because cap rates are coming down and the policy performance, the markets are going to struggle, right? So it's like the worst of both scenarios is low interest rates and higher tax rates. That would be the absolute doomsday for index universal life policies. And so I know that over the last 12 years, the market's been really good. But if you are somebody who's of the belief that, hey, we've been going through this, and somebody's trying to sell you on the fact that, listen, we know there's going to be volatility, and this is the problem. A lot of IUL people are selling people on the fact that we know there's going to be volatility in the market, and so because of that volatility, we need to make sure that we get your money, as much money into these things, into an IUL as possible. That way you have that 0% floor, right? And then it'll go up, and it'll be flat on negative years, and it'll go up on good years. But the bottom line is, if we have a lot of flat years, and then they illustrate it at a certain assumption, and then because interest rates stay low, the cap rate comes down. So now the big years are not as big as they said it would be. The compounding and the opportunity cost of that lost money in reduced cap rate and that spread eats into the policy immensely. The policy starts to feed on itself economically, and it really is destructive, right? So I want if you are somebody who is politically, I'm going to say conservative, economically conservative, I implore you, before you buy an IUL, before you sell another IUL policy, reach out to me, have a conversation with me, because I know for a fact, all you have to do is email Chris at Life180. Down below, there's a link. You can go to my Calendly account and set up an appointment with me. I'm happy to talk with anybody. This is one of those things, I am so passionate about this right now, because I believe we are coming into an economic storm that's going to be really, really ugly. I don't know what it's going to look like, if I'm being straight with you. It could be inflation, it could be deflation. There are people that I follow on both ends of the spectrum. You got the Harry Dents of the world that believe deflation is inevitable. You got Peter Schiffs of the world who believe inflation is inevitable. And honestly, they all make really, really good points. And I think to say that either one of them is going to be right is just like shortchanging what's really going on. Nobody really knows what's going to happen. Quite frankly, I think until the 11th hour, we're not really going to know what they're going to decide to do and how they're going to deal with a monetary policy, and that's going to be what ultimately drives the decision on how it's handled. So I would love to talk to anybody that has any questions about this, because what I'm a big believer in, we call whole life insurance the and asset for a reason, because when you put your money inside of a whole life contract, it is a financial fortress. That money will be there, guaranteed, no fractional reserve banking. You have access, liquidity, use, and control of that money if you need it. If you want to buy it to get gold, or use it to buy gold or silver or any other currency, any other asset, real estate, anything of that nature, you can tap into it to leverage and access that money. And if you decide not to, if the economy goes really well, then you have it in this amazing account with amazing guarantees that can only get better, I think, from here, because interest rates can't stay low and dividend rates can't come down that much more. And so, like, I just love it, because to me, whereas IUL is kind of damned if you do, damned if you don't, whole life insurance right now is, it can get a little worse, but even in the worst case scenario, it's not that bad when you look at the guarantees. But on the upside, if things get really bad, you have liquidity, the money's there, it's more liquid. If something happens in the next 2 years, the surrender charges are not as heavy up front in a whole life policy as they are in an index universal life policy. They're much less. You have much more immediate liquidity. If you structure it properly, you have a lot more flexibility to create more liquidity inside of a whole life policy quickly. And then on the back end of it, if things go really well, the policy is going to grow. You're going to have access to that capital. And if things go really bad and it inflates and we're worried about the valuation of the dollar, you can take the money out of that and put it into an asset really quickly that you feel is going to protect you and your well-being much more effectively. So anyway, I hope that makes sense. I hope it serves you and gives you, some food for thought to think about different ways to think about index universal life, different ways to think about, ultimately, what are your values? What are you trying to accomplish in your life financially? And is what you're doing really in alignment with where you want to go, right? I think that's one of the big challenges that I have, is people are just not actually setting up a plan that is going to help them get where they want to go, and according to their values, right? The incongruency between what people believe is going to happen and where their money is. It's like they believe all this negative is going to happen, yet they put their money in a place where it's super at risk if what they believe to happen is going to happen happens, right? So, like, to me, that's not a very good way to live life. That creates a lot of stress and anxiety, and I just want to help people understand kind of how to navigate that whole scenario differently. So anyway, I hope that helps. I hope it serves you. If you haven't already, please hit the like button. I really appreciate it. If you haven't, make sure you hit subscribe, click the bell, that way you get notified every single time I launch a new video. But thanks so much for being here. I know it's rare for me to do a live in the middle of the afternoon on a weekday, but I was just thinking about this, wanted to hop on here real quick, and hope it helps. So have a blessed, inspirational day. I'll see you on the next video. Take care.